the Bahamas, Bermuda, Cayman Islands, Curacao, Mauritius, Isle of Man, Monaco and Andorra are just a few examples of small nations, often linked to stunning beaches, lavish casinos and refreshing cocktails. These are merely a small fraction of around 45 significant tax havens worldwide. These warm, palm-lined countries conceal over $8 trillion in personal wealth, enough to cover global public health expenses for the entire year. Tax havens are unique locations where individuals and corporations can hide their money while paying minimal or no tax. As the wealthy accumulate more wealth, these secretive spots have become prime destinations for tax avoidance, resulting in alarming repercussions for the global financial system. Today, we will look at how they fuel inequality, undermine governments, and create a playing field that's unfair to anyone else. Hit a like button, subscribe, and we will uncover the truth about these financial black holes and their far-reaching impacts. So what exactly are tax havens? Simply put, they are places where people and businesses can pay very low taxes or sometimes no taxes at all. These special jurisdictions are designed to attract money from around the world. Imagine a financial playground where the rules are more friendlier for the wealthy and corporations. In fact, it's estimated that about 8% of the world's financial wealth, around $8 trillion, is tucked away in these tax havens. Tax havens have a very few features that make them so appealing: confidentiality and secrecy laws. Many tax havens have strict privacy laws that keep the identities of account holders hidden. This means that individuals and corporations can shield their wealth from prying eyes, making it hard to track where the money is really going. Lack of transparency and regulation. These jurisdictions often have very few rules and regulations, allowing companies to operate with minimal oversight. The lack of transparency can lead to a range of issues, including tax evasion and money laundering. Some well-known tax havens include the British Virgin Islands, which is famous for its relaxed tax law and anonymity, Bermuda, known for having no corporate income tax, and Cayman Islands, where many global companies set up shop to avoid hefty tax bills. These places are not just exotic vacation spots, they are at the heart of the global financial systems that allows the rich to keep more of their wealth, while everyone else is left to pick up the tab. In the short, tax havens are designed to keep money flowing into their economies while costing governments billions in lost revenue. It's a system that benefits the few at the expense of the many. Guys, share with us your personal opinion about so-called tax havens. Do you find this system fair? The numbers surrounding tax havens are staggering. It is estimated that well over $8 trillion of privately owned wealth is stashed away in these hidden corners of the globe. To put that in perspective, that's more than the entire GDP of Germany. According to IMF, this practice costs governments around the globe about $500 billion every single year in lost tax revenue. Just imagine what that kind of money could do, funding schools, hospitals, and essential services that we all rely on. So, how do tax havens affect domestic economies? It's all about capital flight. When wealthy individuals and corporations move their money to these tax-friendly jurisdictions, they make valuable resources away from their home countries. This outflow of cash means that countries lose not only potential tax revenue, but also the ability to invest in their communities. Let's break it down. When governments lose tax revenue, they struggle to fund essential services like education and healthcare. For example, in many low-income countries, the amount lost to tax havens could pay for half of their public health budget. This leads to overcrowded classrooms, underfunded hospitals, and deteriorating infrastructure, ultimately affecting everyone's quality of life. Moreover, this loss of revenue deepens inequality as the burden of funding public services falls increasingly on those who can afford to escape the tax system. In the end, while the rich get richer by hiding their wealth, the rest of us are left dealing with the consequences. Tax havens not only drain money from economies but also create a vicious cycle that perpetuates inequality and undermines public services we all need to thrive. Tax havens play a significant role in widening the gap between the rich and the poor. They allow wealthy individuals and large corporations to avoid paying their fair share of taxes, which exacerbates wealthy inequality, especially in low-income countries. These countries lose about $200 billion each year due to tax avoidance and evasion, money that could have been used to support essential services like healthcare, education, and infrastructure. This massive loss not only hinders economic growth, but also impacts social stability, leading to increased poverty and humanitarian crisis. As resources dwindle, the most vulnerable populations suffer the most. creating a cycle of inequalities that is hard to break. The consequences of tax havens extend beyond economics. It also threatens political stability. The secrecy and lack of regulation associated with these jurisdictions can foster an environment of political corruption. When elites hide their wealth in tax havens, it becomes easier for them to engage in corrupt practices, undermining trust in government institutions. Additionally, the lack of transparency in these financial systems can erode democratic governance. When a few individuals or corporations hold significant power over the economy by using tax havens, it creates an uneven playing field. Citizens may feel powerless, leading to disillusionment and a lack of engagement in the political process. Countries around the world are finally waking up to the danger posed by the tax havens and have started taking action. The OECD has created criteria to help identify tax havens and assess their impact. One of the key initiatives is the Common Reporting Standard, which encourages countries to share information about foreign financial accounts. This makes it harder for individuals and corporations to hide their wealth. Another important initiative is the Base Erosion and Profit Shifting Project, aimed at closing loopholes that allow companies to shift profit to low-tax jurisdictions. The goal is to ensure that profits are taxed where economic activities occur, not just where the company claims to be based. The European Union has also made strides, introducing legislation to enhance transparency and combat tax evasion. For example, the EU's Anti-Avoidance Directive aims to prevent companies from exploiting tax rules to their advantage. However, these efforts face significant challenges. Critics argue that many of these measures lack proper enforcement and political will can be weak. Despite regulations, wealthy individuals and corporations often find ways to bypass them, keeping the status quo in place. In fact, a report suggests that countries are set to lose nearly $5 trillion in tax revenue over the next decade due to these loopholes. The fight against tax havens is ongoing, and only through global cooperation can we hope to tackle this complex issue effectively. High-profile cases like Apple and Amazon highlight the extent of corporate tax avoidance. Apple, for instance, has been known for funneling its profits through subsidiaries in Ireland, taking advantage of low tax rate. This strategy has allowed the tech giant to pay an effective tax rate as low as 1%, far below the standard corporate tax rate. Similarly, Amazon has used various loopholes and deductions to pay little to no taxes in many countries, despite ranking in billions in profits. These practices have sparked outrage and debates about the fairness in the global tax system. The revelation from the Panama Papers and Paradise Papers further shed light on the widespread nature of tax avoidance. The Panama Papers, leaked in 2016, exposed how wealthy individuals and corporations used offshore accounts and shell economies to hide their wealth and evade taxes. This scandal implicated numerous high-profile figures and raised questions about the integrity of financial systems worldwide. The Paradise Papers, released in 2017, continue this narrative, revealing more tax avoidance strategies used by corporations like Apple and Nike. Together, these investigations illustrate the urgent need for stronger regulations and transparency to combat the pervasive issue of tax havens and corporate tax avoidance. As we've seen, tax havens are more than just exotic financial outposts. They represent a hidden world that profoundly affects our global economy. They allow the rich to escape their fair share of taxes, draining billions from governments and deepening inequality. But this isn't just a problem for policymakers or economists. It's a challenge that impacts us all. Imagine a world where that over $500 billion lost annually to tax evasion could be invested in better schools, accessible healthcare, and stronger infrastructure. By fighting against tax havens, people around the world could have the opportunity to create a fairer society where everyone pays their fair share, ensuring that vital services are available for all, not just for wealthy few. Guys, share your thoughts in the comments. Do you believe the existence of tax havens isn't just in relation to governments? Also, hit the like button and subscribe so you won't miss our next cool videos. See you very soon!